Point 1. What is a CBDC really? A CBDC stands for Central Bank Digital Currency, which is basically a digital version of your country's national currency. Instead of paper bills or coins, this money would exist entirely in electronic form, issued and controlled directly by the central bank. At first glance, that doesn't sound too different from the money in your bank account right now, since most of our money is already digital. But here's the key difference. With your current bank account, the money is managed by a private bank that you chose. With a CBDC, the central bank would be the one directly managing and controlling your account. There would be no middleman. Your wallet would essentially be tied directly to the government. Governments present this as an upgrade. Payments could be instant, secure, and borderless. You wouldn't have to wait days for transfers, and sending money internationally could be as easy as sending a text. But behind this convenience lies an uncomfortable truth. CBDCs are not just digital money. They are programmable money, and that changes everything. Point 2. Programmable money. The game changer. Here's where things get interesting and scary. Unlike regular cash, which you can use however and whenever you want, CBDCs could be designed with specific rules coded into them. That's what experts mean when they say CBDCs are programmable. Let's break this down. Imagine the government wants to boost the economy by encouraging people to spend. They could literally program your digital dollars to expire in 6 months if you don't use them. No saving, no hoarding. Just spend it or lose it. Or maybe the government wants to push certain social policies. They could restrict CBDCs so they can't be spent on cigarettes, alcohol, or gambling. They could even tie your spending power to your behavior. If you rack up too many speeding tickets or post something critical online, maybe your access to money gets limited. This isn't science fiction. The technology for programmable money already exists, and CBDCs give governments the infrastructure to use it on a massive scale. Point 3. Can your money really expire? Here is where things get really shocking. It is not just a theory. It has actually been subjected to testing. During pilot projects in China to test out the digital yuan, some of the money that was delivered had expiration dates. The citizens were informed that if they did not spend the money within the specified time frame, it would be taken away from them. What is the official explanation? To incentivize expenditure and boost the growth of the economy. And for a short time, it was effective. People spent money more quickly. However, consider what this will mean in the long run. The very notion of setting aside money, generating wealth, or planning for the future could well be subverted. For many generations, people have depended on money as a store of value. You earn it today, you save it, and you can spend it tomorrow, next year, or even decades later. However, if your money has a limited shelf life, it will no longer be able to function as a store of value. It becomes a government-issued use it or lose it coupon in this case. That is not simply a change in the economy. It is a change in culture and psychology as well. It would result in a significant shift in the way that people think about their employment, their savings, and their financial independence. Point 4. The benefits governments advertise. Of course, governments aren't going to lead with the scary stuff. When they promote CBDCs, they highlight the benefits. And to be fair, there are some legitimate ones. Financial inclusion. Millions of people worldwide don't have access to traditional bank accounts. A CBDC app could give anyone with a phone access to money, even in rural or underdeveloped areas. Faster payments. No more waiting for paychecks to clear or for international transfers to process. Transactions could be instant and cheap. Lower costs. Businesses could save billions in fees by cutting out middlemen like Visa, MasterCard, or PayPal. Fraud prevention. Because CBDCs would be issued and tracked by central banks, it would be harder to counterfeit or launder money. Governments argue that CBDCs are simply the next evolution of money, just like paper bills replaced coins centuries ago, and credit cards replaced checks. But critics warn that while the benefits are real, so are the risks, and they could outweigh everything else. Point 5. The hidden risks and dangers. This is where the conversation gets serious. CBDCs open the door to a level of government control over personal finances that has never existed before. Let's talk about the biggest risks: surveillance. Every transaction could be tracked in real time. Governments could build profiles of your spending habits, location, and even lifestyle choices. Privacy, the kind you still have when you use cash, would vanish. Behavioral control. Money could become a tool of social engineering. Buy too much fast food? Maybe your health insurance premium goes up. Travel too often? Maybe your carbon footprint limits how much gas you can buy. Financial punishment. If you're accused of breaking laws, or even just opposing government policies, your account could be frozen instantly. No due process, no appeal. Just like that, you'd be locked out of your own money. Elimination of cash. Many experts warn that once CBDCs are fully adopted, governments may phase out cash entirely. That means no alternative system, no escape, and no financial privacy. When you combine these risks, CBDCs start to look less like a modern upgrade and more like a potential financial surveillance system with the power to control entire populations. Point 6. Global experiments already happening. The idea of CBDCs isn't theoretical. It's already being tested and, in some places, implemented. China's digital yuan, perhaps the most advanced CBDC project in the world. Pilot programs have tested programmable features like expiration dates and restrictions on spending. Nigeria's Naira, one of the first CBDCs launched officially. But many citizens rejected it, preferring cash or even cryptocurrencies instead. In fact, when Nigeria restricted cash to push people toward the Naira, protests broke out. The Bahamas Sand Dollar, designed to help residents of remote islands access money more easily. A small-scale but real-world test of how CBDCs can improve access. Europe and the US. The European Central Bank is moving forward with plans for a digital euro, while the US is researching a digital dollar. Both face strong debates about privacy, with critics warning that CBDCs could be a Trojan horse for government overreach. These case studies show that CBDCs aren't a distant future, they're being rolled out right now, and how each country implements them will shape the global debate about freedom versus control. Point 7. Convenience versus control, the future of money. In the end, central bank digital currencies, CBDCs, are a compromise. You gain efficiency, speed, and convenience on the one hand. On the other hand, you run the risk of granting governments an unprecedented amount of authority over your financial life. The advantages will be greater than the drawbacks for certain individuals. Picture being able to pay across borders without exorbitant fees, or getting assistance from the government in the immediate aftermath of a calamity. However, for other people, the dangers are absolutely horrifying. Picture yourself being compelled to disperse money that you would not choose to disperse. Imagine having no privacy whatsoever for whatever purchase you make. Envision your financial resources being turned off as a result of your identity, the places you visit, or the things you say. That is the point at which we will be forced to make a decision. The actual dilemma is whether central bank digital currencies, CBDCs, will be developed in order to give citizens more authority or to keep them under control.